Hi, and welcome to inderesTV. Incap published its Q2 report today, and I have the honor to interview its CEO, Otto Pukk, about the result. Hi, Otto, and welcome.
Hello, Pia. The honor is, of course, all mine, and always nice to talk to you.
Good. So let's start with the recent positive estimate revision. You upgraded your guidance in July, and you expect revenue for 2024 to be higher than in 23, and the EBIT to be at the same level as last year. What were the main reasons for the change?
As I said already during the release in first quarter that it was early in the year, and we expected the revenue to increase on quarter to quarter, but we were waiting with the upgrade until we had more visibility and also had seen that our plans had worked out for the first half of the year. And then once we had the numbers together and we looked at the new forecast and the visibility we had closing H1, then we felt comfortable in updating the steering.
Okay, and can you precise a bit, be a bit more precise? What does the at the same level actually mean in your guidance range?
Yeah, in our guidance we said that the revenue will be higher and that the EBIT will be on the same level. So in our steering, higher means 0 to 20%. So within that bracket is we expect the revenue to end up. And before then, when we said we lower, then lower also means 0 to 20%. So if that answers the question.
Sure. Yeah. So at same level is then around 0, like flat. Yes. You returned to growth in Q2 and the margin remained strong. Could you elaborate Q2 in brief? What were the main points in there?
Yeah, no, we continued working as we had planned, in that sense that we have been focusing on new customer acquisition and growing our existing customers as well. And our acquisition that we made in now that is 1 year ago, our US acquisition have also opened up very interesting opportunities for us, and we keep on pursuing that. Of course, we work also with our biggest customer, and we have continued to work with the destocking there. The volumes for our biggest customer also is going up, and so it overall have been a positive development according to the plans that we set out for this year.
Good. Your quarter-to-quarter growth came mostly from India, which is mostly then from the biggest customer. Can we finally conclude the inventory deduction on the biggest customer? Is it finally behind us?
Yeah, and I would say perhaps in bigger parts, but I would expect us to continue as well. You bear in mind that we are talking about hundreds of products. There's the range is big, so on some the inventory reduction is already done. On others, perhaps we still need to work a little bit. But in the overall pictures, we are back now to much more, I would say, normalized volumes with our biggest customer as well. And as I emphasized before as well, so the return is not back to the level where we built up the inventory. It's back to a normal level where the actual demand is. So I think that we will start seeing that level now during the second half of this year being reached at how to say more normal levels with them, and then we'll look at growth and other things from there.
Right, so more like normalized. Yeah.
Yes.
The adjusted EBIT margin remained flat quarter to quarter, despite a clear growth in the quarter overall. Why did the higher sales not boost profitability in the second quarter?
It always comes down very much to the product mix and to of course a lot of issues. Now, I want to perhaps emphasize that if you look at our EBIT during the first half was 11.7, and I think that is or during the Q2 in that sense, and of course that is in the EMS business quite nice results in that sense. So I'm not complaining about the margin. It's always like this, that it can go up or down a couple of percentage depending on the product mix, and we are well in double digits with our 11.7 in the quarter two, and so it has been a good development still.
Yes. So you paid full earnout for Pennatronics acquisition in Q2, which should, of course, mean that the acquisition has most likely exceeded your expectations or the baseline expectations. Can you elaborate a bit on the first year of the US unit and how it developed compared to the other units in the company?
I think as you say very correctly, we paid out the full earnout, and of course that is something positive. We did that because the company have exceeded our expectations or the expectations and plans that we had, and so they have been developing very good and have had both I would say growth and good profitability also over the year. I would say that they, compared to other units, have done a very good result. But of course, it's not only in US where we have been growing. We have been growing in principle in most of our units and have done good work in other places as well. But the US team have come on board greatly, and to be honest, it doesn't feel that they have only been there a year, and it feels like they have been an integrated part of our team for much longer than that, and that of course is a good result or so for the integration process.
Several Nordic EMS companies have given profit warnings or commented on a weak market environment during Q2. Did anything change in the trading conditions in your eyes in Q2, or is it indeed the issue that nothing actually changed, if you think about the market in general?
I think in the market in general, we also have seen tendencies is that in some places that it has been a little bit tougher and so. But for us, we haven't seen from Incap's perspective. This is something that we have seen, I would say, next to us, but not impacting us. So let's see how it plays out. This year we have given the steering for. We are quite sure on and that's why we also did the update. But if how next year looks like, and so that's early to say in that sense. But yeah, we see it as well. We see what other rights and what other people are discussing in the industry. But yeah, so far we don't see any effects from the in the business that we have.
That's good for you then.
Yes.
You state in the report that you see ESG reporting not just as an obligatory step, but as an opportunity to improve measuring and managing activities aiming at sustainable business and growth. Could you elaborate a bit on this? How could ESG be turned to a better business than Incap?
I think in general in business, and not only talking about Incap, I think we who are in different industries and in different businesses, we have a responsibility, and it's not only about earning money, it's how we earn the money as well that is important, and that we do it in a sustainable way, and sustainable both when it comes to environment and our environmental footprint, but also how we treat people and how we do business, and what kind of ethics we have to it. It's not only about making fast money. It's about making sustainable business, and I think that is important. And I think we in the era where we have a lot of startups and companies that are a little bit challenging, and also the norms of classic norms of business, and perhaps have business ideas trying to even move around them in that sense. I think it's important that we sometimes take a step back and think what we are doing, because in the end of the day, it's not only about making money, it's about making money in a good way and in a sustainable way. And I think that is important for me, and it's important for our employees that are very much driving the business in Incap, and also the ESG work comes from down up in Incap, and that I take very much pride of. Yeah,
that's probably very true these days, that sustainability and the well-being of everybody, workers and everybody, is very important in any business. And finally, though, there's been talk in Finland in the recent days about stock exchange related reporting requirements becoming too heavy and costly for small cap companies. As we all know, Incap is extremely lean in the headquarter level as an organization. What is your stance on this? Does all the reporting hinder you from focusing on doing the business instead of just the reporting?
No, I hope we will not end up in a situation where it will hinder us. And I think now that I think I wrote about it as well here in not this release but last release or somewhere, that the whole field is developing, and you have all the stakeholders, the companies, us who are reporting it, and the auditors that will start auditing us, and from the legislative side or government side as well, those that are demanding it. It's a moving target currently, and I think here we need to cooperate and have a joint cooperation when it comes to developing the reporting and policies around the reporting in such way that it doesn't affect the businesses in a negative way. Many of the action points or the measuring points that we are doing, we anyway measure when it comes to our environmental systems and the quality systems and so on. So the data is very much there, but how to combine it and so, of course, is a question. But I really think it's we have a shared responsibility here, all parties, in that sense, to develop this in a way that also is sustainable and don't contribute in companies needing to boost up organizations with things that are not creating value directly for the customers, just to satisfy a reporting need. That shouldn't be the goal of this. The goal is to run sustainable business.
Thank you for your time and your answers. That was all I had at this point. Thank you very much, Otto, and have a great day and upcoming weekend.
Yes, thank you as well, and thanks for having me.